Hi guys, welcome to this Money Control live stream. It's a Friday morning and we are bracing for a quiet session again today. Given the fact that yesterday it was a range bound session, we ended around that 24,400 mark. The GIFT Nifty this morning hinting at a very flat start, but let's see whether or not we manage to hold on to any opening gains, because the trend so far has been, we start the day on a good note, but as we progress, we give up most of the gains and then we end the day in the red. That's what's been happening in the last few sessions, but let's hope we can reverse that trend today. Global cues are also mixed. Wall Street saw a good up move, although Dow was down. Asian markets also mixed ahead of the elections in Japan later this weekend. And in terms of stocks as well, lots to watch out for. You had IndusInd Bank, ITC, GCPL, all of these companies reporting numbers. Of course, we'll be taking stock of all your stock related queries as well. Keep them coming in on a live feed. We'll try and take them up as well. But of course, before we move any further, let's take a look at the top headlines at this hour. Stocks end mixed on Wall Street. A strong rally in Tesla leads the S&P 500 and the Nasdaq higher, while the Dow corrects for the fourth straight session. Treasury yields cool off from 3-month highs. Asian markets trade mixed following mixed cues from Wall Street. The GIFT Nifty is suggesting a quiet start for the Indian market. Crude prices slip about 1% to under $75 a barrel. Meanwhile, gold rises to trade near record highs amid geopolitical uncertainties. And some earnings post-market hours. ITC delivers a resilient second quarter led by hotels and agri-business, but sees margin headwinds across the board, while IndusInd Bank reports a weak set of numbers, missing street estimates on most parameters. Net interest margin is at a 12-quarter low, while asset quality also deteriorates. All right, let's take a look at the cues for trade then. The Nifty Bank index has been holding up smartly, even though the texture of the market has been towards the downside. But today, the Nifty Bank index will be particularly in focus, given the fact that IndusInd Bank has reported weak set of numbers. If that weighs in on the Nifty Bank index, we could see that trend of outperformance reverse in today's session. We'll have to wait and watch for that. But yesterday, the financial space, entire financial space was gaining, and that kept the losses on Nifty under check. Nifty Bank, of course, continued to outperform. HDFC Bank, of course, being the biggest contributor. That has been the trend ever since HDFC Bank reported its numbers. Cement stocks saw buying on the back of positive outlook for the second half. But FMCG stocks, were the big drags yesterday. The FMCG index was down almost 3% on the back of a sharp sell-off coming in on shares of HUL. Of course, urban demand slowdown, that's been the trend that has been emerging from FMCG numbers, and that has weighed on the FMCG pack as a whole. Aside of that, Hindalco was under pressure on the back of, French aluminium maker Constellium's weak earnings that could pressure earnings for Novelis as well. And, other stocks in focus, you had SBI Life that ended with a cut of almost 5% after it cut, its FY25 growth outlook. Of course, we'll be talking about insurance stocks in particular with our fundamental guest who will be joining in later on the show. And, we'll ask him about whether or not it's a good time to look at some of these insurance stocks or not. In terms of option cues, put call ratio jumped to 1 vis-a-vis 0.79 levels. Lots of stocks in F&O band, the new entrant being Escorts Quota, which saw, a 10% kind of a fall yesterday. Today, all the other stocks that will continue to be in ban are the likes of Aarti Industries, Bandhan Bank, IEX, India Mart, Manappuram Finance, NMDC, Piramal Enterprises, as well as RBL Bank. Two stocks have exited the F&O ban list, and those are Birlasoft and GNFC. In terms of fund flows, of course, FIIs continue to sell, relentlessly. 5,000 crore worth of stocks sold in the cash markets. Domestic investors, they have been, a comfort for us, ever since FII sell-off started. So another 3,600 crore rupee worth of buying in the cash markets. But of course, on that note, let me quickly bring on board our technical guest for today. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, great to have you on the show. We haven't really been able to sustain any of the gains that we see on the screen at the start of the session, right? Although we did manage to almost defend that 24,400 mark. What is the texture looking like, given the fact that IndusInd Bank's numbers could weigh in on the Nifty Bank index that has been providing support to the entire market thus far?
Yeah, good morning, Nandita. Thank you for inviting me to the show. So the way the markets are currently set up, it's clearly evident that the cues are mixed. So in such a scenario, what one needs to understand is that there are going to be some stock specific action. Now, when you talk about the broader indices, what I do find is that the fall since October 8th has been quite sharp, in the sense that the range of movement is quite big, but it has been a very gradual decline. Now, when I take a look from all the important lows since June, August, and September, what I find is that we are at a very important inflection point. So, which is around the levels which you mentioned, 24,350 to 24,400. So, that those are very important support areas, which I believe will not be broken so soon. So, I'm saying broken in the terms of the end of day closing. Now, so prices are trying to hold on there. If you see over the last 2 days, attempt has been made, but it has not been successful. Now, what is saving the market, so to speak, is Bank Nifty, right? If you see over the last few sessions, Bank Nifty has not been giving up. Instead, it is inspiring some hope in the bullish camp. Now, I believe that with the kind of movement which we are seeing, yesterday we saw some traction in the PSU banks as well. So, what I believe is that Bank Nifty is going to lead the recovery. Yes, I am expecting a recovery now, and Nifty IT will be the second index and Nifty will be the third. So Nifty will be a laggard. It was leading from the front. Now it has slipped back in its position. But then overall, I believe with the oversold situation reached, so probably we'll have a happy Diwali, because the way the market is getting set up, I do believe that we should not be giving our hopes now on a recovery. The recovery is very much due on the cards, and Bank Nifty, like you rightly mentioned, has been holding well. And if we were to see a positive closing today, then we can expect a better week in the towards the end of the October expiry and continued forward. So hope is not lost for the bullish camp, but yes, the decline has been quite unnerving. Many people are talking about more downside, but I do not expect more downside from here.
Okay, not expecting more downside from here, but talking about IndusInd Bank in particular, how much of a dampener would that be on the Nifty Bank Index today? Because let me just take you through the numbers, very quickly. Numbers have been weak. Profit, net interest income, all have been a miss. Even net interest margin is at a 12-quarter low. NPAs have risen. Asset quality has deteriorated. Just going through what Motilal Oswal has to say about IndusInd Bank, they've maintained their buy call. Target price is now at 1,500 rupees per share, and they've flagged off the fact that the company or the bank is steering through near-term challenges. They've cut the earnings estimate by 16.7% to 8.7% for FY25 to FY26, and that could lead to a return on asset and return on equity of 1.6% and 13.6% by FY26. Margins, of course, have contracted sharply, as I mentioned, multi-quarter low, and MFI mix, has declined to 9.2% of loans. MFI, of course, has been a area of concerns, and we saw that playing out in Kotak Bank and RBL Bank as well. So it's an industry-wide issue, and of course, IndusInd Bank also, feeling the heat on that front. Progression of asset quality, particularly on the MFI business, that will remain key to watch out for, according to Motilal Oswal. They've also said that RBI approval for a fresh term for CEO Sumant Katpalia remains key, because remember, he had got extension from RBI for 2 years and not 3 years. So this also will be a factor to watch out for. Given the fact that we have seen good performance from banks. In the last few days, ever since HDFC Bank reported numbers, how much of a dampener would IndusInd Bank be? Do you think at least today could be a down day for the Nifty Bank Index? And what are the levels you should be watching out for on an IndusInd Bank today? Any trade here?
Yeah, on the contrary, IndusInd Bank has come into some decent set of supports. So all the negative news has already been priced in. So on the contrary, it would be a low risk buy opportunity here. from the overall setup, I see that the overall setup is encouraging, and it would be a good idea to go long in IndusInd Bank rather than go short, because overall Bank Nifty is positive, and like I mentioned, Bank Nifty is going to lead the recovery. It has been making higher lows since August, so there is clearly a buying interest developing in Bank Nifty, because that is an index that has not moved so much. So I would continue to be a buyer,
Hmm.
and like I said, IndusInd Bank is a buy, not a short from my side.
Okay, IndusInd Bank is a buy and not a short. But on that note, hold that thought. Markets have opened, and we are getting the first ticks. Axis Bank, leading from the front to 2.5% uptick. CEO has got a fresh term. So the stock reacting to that. ITC among the top Nifty gainers. Of course, numbers were slightly above estimates. Although margins pressure was seen across segments, but in terms of revenue profits, it was a pretty good show compared to the other FMCG players, which is why the stock is also reacting. Almost 2% gains coming in on ITC. But I think we were getting positive ticks at the start, but of course, you've once again slipped below that 24,400 mark. It's red across the screen when it comes to the benchmarks as well as the broader end of the markets. Sensex holding on to that 80,000 mark as of now, but it's a 50-point downtick there. Mid-cap index also down by 0.2% or thereabouts, and the Nifty Bank index has also slipped in the red. It's down 150 points, and IndusInd Bank, that stock is down 10%, which is what is weighing in on the Nifty Bank index, because of course, as I mentioned, Axis Bank on the other hand is the top gainer on the Nifty, gaining 2.5% or thereabouts. In terms of other sectors, just want to see what the FMCG pack is really doing at the current juncture. Yesterday it was the big laggard. It saw a 3% cut thanks to almost 6% cut on a stock like HUL. Today the FMCG pack is trading higher thanks to ITC, a 1% up move on the Nifty FMCG index. But autos, banks, metals, PSU banks as well, realty, all of these sectors are trading in the red. Pharma is the other one that's doing well, holding firm, 0.7% higher when it comes to the pharma index. IT also clocking in mild gains at the current juncture. So the big laggards today are banks, autos, and metals as well among sectors. In terms of other movers, let's quickly take a look at what are the top movers on the Nifty alongside Axis Bank and ITC. ICICI Bank is also holding firm, 1% up move coming in there. HCL Tech, Asian Paints, Kotak Mahindra Bank. So all of the other private banks are doing well, barring a 10% cut or plunge coming in on IndusInd Bank, reacting to the weak set of numbers that we've seen. In terms of other losers, you have NTPC that also reported numbers post market hours yesterday. L&T has invited a downgrade from one of the global brokerages, and reacting to that, 1% lower on L&T. Some of the auto names under pressure, M&M, Hero Moto, and the likes. But looking at the market open, 10% lower on IndusInd Bank. We were just talking about going long on it. Good opportunity?
Yeah, overall, the reaction is purely on the IndusInd Bank result. And like I said, that I would not be shorting into a reaction. Rather, I'll wait for some recovery, and I will continue to hold on to my bullish view on the Bank Nifty. Bank Nifty, yes, the knee-jerk reaction right in the morning, I do not ascribe any view to it. And like you can see here, after the knee-jerk reaction you saw in the Bank Nifty, the prices are recovering. So we should not be having any opinion on the, at least for the first 5 minutes, we need to see what the market is doing. And based on what I can observe, market is just trying to gather some insights based on what is happening. And well, after the immediate reaction, which everyone is aware of, the markets are again back to some rebound. So one should not be in a hurry to go short here. Should wait and watch. I'm definitely not on the short side as of now.
Okay, the bullish view remains on IndusInd Bank. One should not act on knee-jerk reactions like this, but wait it out till there's some bit of stability coming in, and then act. But the other stock that I want to talk about is ITC. The trend across the FMCG earnings has been the fact that there's been a slowdown in urban demand as well. But ITC has clearly, given out a good set of numbers. Revenue profits have been good, but margin pressure has been witnessed across the board. The positive surprise was, strength in the agri business. Hotel business, of course, did well, continues to perform well. Cigarette volumes also grew by 3%, which was in line with expectation. In fact, Street was working with 2.5 to 3%, so it's come in at the higher end of expectations. Higher input costs, including costs of coffee, cocoa, and crude. These are some of the factors that hurt the margins in the second quarter. But brokerages have bullish calls here. Nomura has a buy call, target price at 555 rupees per share. It has noted the good performance on top line, but margin pressure has been witnessed, as I mentioned, across segments. FMCG growth of 5.4% or 5.5% is in line, but margins contracted here as well. Hotels business held up strong. Paper business improved, but operating margin here was hit as well. But it was the agri business that surprised on the upside. Even Morgan Stanley has an overweight rating with a target price of 554. Looking at the stock performance, we have seen FMCG stocks lose ground, right, in the last 1 month or so. The stock of ITC, of course, is down somewhere around 6% or so. Would you, see a reclaim of 500 anytime soon? Do you think the worst of the selling is over? What is the chart telling you?
Yeah, first of all, ITC is a bellwether stock, and everyone likes to buy ITC. So, universally, everyone likes to give only a buy call in ITC. Now, when you take a look at the kind of strong move that we witnessed from July, now the stock had reached a pinnacle, and the decline over the last few weeks has come into some very strong set of supports. So for those who like to look into FMCG and they want to invest into FMCG, then this is a good point to consider ITC.
Okay, but what about Godrej Consumer? That also reported numbers and the stock is doing well. Of course, 3 month, 1 month returns have been negative. But on the charts of a GCPL, what kind of levels would you be working with? It's at 1294 right now. Still 300 odd rupees away from 52-week highs. Would it, resume its uptrend now after giving negative returns?
The overall movement has not been very encouraging. So we have to take it by the move. So right now, the kind of move which we are seeing right now in the FMCG, overall the momentum is not great. And similar to last time when the festive scenario did not generate the kind of response which one expected from the FMCG stocks, they also suffered the decline. So right now, Godrej consumer products should be avoided.
Okay, avoid GCPL, that's the call. But let's talk about NTPC that also reported numbers post market hours. Margin and EBITDA are both below estimates. Stock is reacting to that as well. PSU stocks, as we've all seen, the story seems to have played out for the time being, right? Look at the stock of NTPC, it's given negative returns, and after, of course, clocking in a very handsome rally. All of these PSU stocks, they have come off quite a bit from their highs. But does this present a buying opportunity, or do you think much of the up move is already behind, and it could go further down on the charts?
Yeah, so when you take a look at NTPC, the PSU sectors have really been affected quite a bit. And the kind of decline which we are seeing right now, this decline could persist, and it is better to avoid this stock. It's actually becoming a shorting opportunity here. So those who are looking for some short candidates, then this could be a good bet on the downside.
Okay, looking at a shorting candidate, this will be a good stock to watch out for. But the other stock that I want to talk about is an L&T. This stock has also been stuck in a downtrend, right? It's down 10% almost in the last 1 month or so, and has come off significantly from its 52-week highs as well. As I was mentioning at the when the markets opened, that it has invited a downgrade. UBS has downgraded the stock to neutral, and target price has been cut by 400 rupees to 4,000 rupees from 4,400 rupees. UBS has noted that core earnings may be supportive, but it's a new order growth that is likely to weaken. And markets, in terms of L&T, always tends to focus on order growth rather than core earnings for the company. That's what UBS has pointed out. But it has maintained that valuations are comfortable at the current juncture because it is available at a discount to its other industrial incumbents. But is this kind of sell-off that the stock has seen in the last 1 month? Even the last 6-month charts are indicating the fact that the stock has given negative returns. Would it be a good candidate to look at from the infrastructure space, or would you say that there is more downside waited out?
Yeah, L&D definitely is under a bearish grip right now, and the kind of moves which it is displaying, it is clearly evident that there are bearish interests which have developed, and it would take a while for this scenario to exit. So same is with the other engineering companies like Cummins. So they are also suffering from the same scenario. So overall, this space is under a surfeit of selling pressure. So those who are in the trading mindset can look for going short in these candidates. Otherwise, it's an avoid in terms of buying at these lower levels.
Okay, that's the view on L&T, but let's shift focus to our viewer queries that we are getting this morning. The first one is coming in from Renu Keshwar and wants to know your thoughts on KPIT for the short term. Is the dip an opportunity to buy? It's more than a dip. If you look at the charts in the last 2 days, yesterday it lost 15-16%. Today again it is on a downward trajectory. So 20% lost, I think, over the last 5 sessions, 20-21%. Is this a major breakdown, or how would you look at it? Do you think it's a good opportunity to buy?
Correct. So there is a nice channel breakdown which has emerged from the levels of 1600, and though the channel target has been met, it still shows that there is more negativity in this stock, and it could persist lower. So it's advisable that if you are having a holding, then you should exit and look for some opportunities at a later date, because even on the higher time frames, so the supports are emerging at around 13.15. So if prices were to decline into those supports and if it holds back, fine. So if you want to keep a stop loss, keep it at 1300.
Okay, keep a stop loss at 1300 on a KPIT Tech. That's the view. But we also have another query on the mid cap IT space. So would like to take it up right now. Shrivardhan Gupta wants to know your thoughts on a First Source, and I think he holds positions at 297, and he wants to know what target to work with. 335 is where the stock is at. Entire mid cap IT space has been doing very well, in fact even outperforming the large cap peers. But how does really First Source, where does First Source stand on the charts? Because in the last 1 month it may have fizzled out, but 6-month gains have been in excess of 50% or so.
Right. So the last 1 month, everything has fizzled out. So the best part about FSL is that it has managed to hold on to higher levels, which is a very important criteria when you take a look at the kind of beating the mid and small caps received. So that way the stock is poised for much higher levels. Now the targets are emerging close to around 650 within the next 1 year. So it's a good stock to hold. So one should not exit from this at the moment.
Okay, don't exit. That's the view. Let's shift focus to another query then. This one's coming in from Hitesh. He wants to know your thoughts on BHEL. Of course, BHEL, has seen a major correction as well, in tandem with other PSUs. 20% shaved off in the last 1 month. It is even below that 250 rupee mark. 200, do you think that level is under threat? And if somebody has positions, should they exit, book losses? How should they go about this holding?
Yeah, so the exit point was much higher, closer towards 290. So there is no point in exiting now. So actually now the stock has corrected so sharply from the July highs that it is actually heading towards support to the levels mentioned around 200. So around 200, if the price stabilizes, one should actually be looking to buy into BHA.
Okay, that's the view on BHEL. But from BHEL to KNR Constructions, Vic has written in and he wants to know your thoughts on this stock. He bought KNR Constructions at the rate of 361 rupees per share. Now, the stock is at 285. He wants to know what he should be doing. Your advice?
Currently, keep a stop below 265 and just hold on. That's the only alternative right now.
Okay, that's the view then on KNR. Hope that helps you. But let's also take up a query then coming in from Satya CK. Has a query on Bharti Airtel. For 1 to 2 years, would the current levels be appropriate to accumulate Bharti Airtel? Your thoughts?
Yeah, with the kind of the telecom space showing some continued developments and Bharti managing to weather the storm and moving from strength to strength. So if you see here, Bharti has actually gone up by more than 50% in the last 1 year. So which is quite an encouraging sign. And overall, the stock is a good mover. So one should continue to hold on to the stock as part of your investment.
Okay, hold on to telecom stocks. Some bit of traction being witnessed there, and of course, fundamentally as well, the view is pretty upbeat because the tariff hike cycle has just about started. Otherwise, there's another query coming in on a Tata Motors. I think Naveen wants to know what one should be doing, why the shares are falling like this, and how should one go about navigating, the drop in shares of Tata Motors. Your thoughts? Last 6 months, we've seen a 12% downtick, and the stock is even below 880 levels, 900 levels at the current juncture.
Yeah, so Tata Motors, apart from price action, also suffered an image hit with the expiry of Ratan Tata. So maybe some bit of damage is also emerging on based on that front. But then overall, the price is undergoing a correction, and the correction is not going to stop in a hurry. So if you are looking to invest into Tata Motors, your outlook should be for at least 3 years, and currently the price is showing more decline in store. So it would be best that one exits their position, if any, below 850 and not do any fresh investments.
Okay, that's the view on Tata Motors. But the next query is from the auto component end of the market. Raja Pasala wants to know your thoughts on Samvardhana Motherson. He is holding shares at the rate of 200, and he wants to know the view for 2 months, or are there any chances of an up move from here? The stock has been
Yeah,
stuck in a downtrend. So
yeah.
here
So
200,
Motherson,
should that the, yeah, go on.
yeah. So Motherson definitely has been in almost a range bound situation when you look at the higher time frame charts. And 200 is an important level which one should be tracking. So at the moment, it is at that juncture, it is trying to test our patience. So I would tend to believe that I would hold on and I would see what really happens on a end of day basis, whether it closes below the 200 zone, because right now it is at an important support, so one should not exit. You should keep a stop loss below 195, and one should wait, because currently it is trading at 191, sorry. So the stop loss is below 189, so it's an important support as well. as I can see right now. So below 189 would be an exit clause.
Okay, that's the view on Samvardhana Madhusan. But with that, we've come to the end of the query segment. Raja, before I let you go, what would your top recommendations be for the day? And
Yeah,
any, Samvat or Muhurat picks that you would like to share with us?
yeah, sure. So the trade which I would like to suggest is Glenmark. So Glenmark is at an important stage right now. Pharma, amongst the pharma stocks, Glenmark has come to a very good support. So one can consider Glenmark as an opportunity to initiate a trade right now at current levels, and have a stop loss at around 1665, and because the overall momentum is quite good, and I have a target of 1710 for the upside. Now, as a Murat pick, I would like to suggest Zentech, because Zentech is definitely one of a very strong mover. And from the defense space, yes, the defense space is undergoing some bit of declines and correction. But then I feel that this sector is again bound to recover. So Zentech is one stock which has come into some good set of support. So I would that will be one of my pick. And the second pick would be from the coffee industry, beverages industry, which is Bombay Burma (BBTC). So I would recommend it at current levels as a multi-day pick with a stop loss at around 2650 for a target towards 2950 and 3250.
All right, some recommendations coming in for the day as well as for Muhurat trading as well. But with that, Raja, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Wish you a very happy Diwali and a prosperous new year ahead.
Same to you. Wishing you the same and to your team.
Thanks a lot. With that, let's just take a look at what the markets are really doing at the current juncture. Volatile, no big cuts coming in, but it is the index rather is splitting between gains and losses. Although the Sensex is managing to hold on, or is just about clutching on to that 80,000 mark. Let's see, where we head as the day progresses. But on that note, let me also bring on board our next guest for today. Joining me, Siddarth Bhamre, Institutional Research Head at Asit Mehta Investment Intermediates. Joining in to talk about what has really changed, in the insurance space that, they have turned bullish on this particular space. Siddarth, great to have you on the show. Always a pleasure interacting with you. The growth in the insurance space has been fairly sluggish in FY24. There have been regulatory changes as well. But what has led to the underperformance of this space over the last 2 to 3 years? If you could take us through that.
Good morning, Nandita. Always pleasure to be part of your show. Well, insurance, if you see, last 3 years have been a sector which has significantly underperformed, despite market has done pretty well and so much of money flowing into equity. And predominantly, the COVID impact, which can be the case. And also, in budget 2023, there was an announcement which led to significant underperformance. And that announcement was that any policies where premium is above 5 lakhs, the surrender value would be taxed in the hand of investors at the tax lab, which led to significant change in product mix, where more traction started happening in ULIP compared to par and non-par products, where the margins for the industry were higher in the range of 35-40%, and ULIP margins were around 10-15%. So the entire dynamics were changing, where growth was slightly different, and the product margins or the overall margins were shifting on a downward trajectory. Even if you look at, recently, as we had seen that the cap on the commission structure had been removed, but the murmurs of the same were happening since 2-3 quarters before that. So these were few factors: tepid growth, COVID impact, change in product mix, which led to decline in margin, led to significant underperformance by insurance space.
Right. But now what has changed for you at Asit Mehta to think that this underperformance is out of the way? Has the tide really turned?
There are two things. Firstly, that industry is adapting well now to the new business dynamics, new margin play. And we are also seeing, the growth rate slightly coming back. If you look at the CAGR rate for, last 5 years, it was around 14%. And now last 3 years CAGR growth for AP, annual premium equivalent, which is, the new premium and the first year premium is taken of the policy. There we are seeing significant growth rate. We are seeing that companies are adapting well to the changing dynamics, and also very importantly, Nandita, that valuations have now become attractive. Uh, some of the names which were trading at above 4.5 times price to EV, embedded value for insurance space, that's the metrics which you see. They are now available around 2.3. We are seeing that the adoption is pretty much naturally, companies are getting adapted to all these things, and markets have been doing well. Money is flowing more into the ULIP products. So all in all, valuations, adoptions, diversified product mix, diversified distribution channel of companies are suggesting that now, after 3 years of underperformance, this is the space which cannot be ignored, and one should take exposure over here, and that's what is making us bullish.
Right. And within the insurance space, any preferred picks and the rationale behind it?
Well, we are optimistic on private space as such. Needless to mention, the management is better over there. But one of the names which I would like to first is SBI Life. And Nandita, here the margins, the VNB margins which are called, they are highest and they are going fastest at 23%. It has a very good distribute mix. It has good amount of premiums flowing in through its banker channel. It has agents in deep in three-tier cities as well. And the cost of mobilization of premium is also one of the lowest, and it is one of the fastest growing company. It's available at around 2 times price to embedded value, near to HDFC Life, but it commands premium now, unlike before, because of the metrics, favorable metrics. And we believe this is one of our top pick, and it offers decent upside from here. You can see that stock currently trading around 1645. We have target of around 2015 rupees over here, offering upside of around 20 to 23%. So that's the first stock which I want to talk about. ICICI Pro Life, that is also one of the name which I want to dwell upon. It is growing fastest in the group segment. There are two kind of policies, Nandita. One is individual, that is retail policy, and group policies, group insurance. In group insurance, ICICI Bank is growing fastest. It has highest amount of ticket size in terms of premium, which means that it has cream clients. Also, diversification of product mix. Earlier, it used to have around 80% of ULIP. Now, the ULIP is just 40% of the total product profile. Even on valuation perspective, it is quite cheap at this point of time, trading around 2 times price to EV, and our target price over there is around 893, offering around 16% return. Same goes with HDFC Life. There too, after recent correction, quite attractively, stock is valued. It used to trade around 4.5 times price to EV. It has corrected significantly. It's now trading around 2.3. Interestingly, despite all the challenges which company has seen in recent past, it has maintained its VNB margin, which is noteworthy, and that also forms part of our preferred pick in insurance space.
But let's talk about LIC, the market leader, right? And it has corrected quite a bit, over 300 rupees off its 52-week highs as well, under 1,000 rupees at the current juncture. So looking at that, one would argue that it is, among the cheapest stocks in this space. But, you as a brokerage house has a hold rating on the stock and not a buy rating. Any particular reason behind that?
Yeah, so LIC is a mammoth of a stock, and Of course, I appreciate that management has been saying that they are taking a lot of measures to increase the growth, change the product mix and such. But we haven't seen the pace of it. We haven't seen, it happening significantly on the ground, which will result into overall turnaround. We are not saying that we'll never buy the stock as such, but right now it is available at price to EV of around zero point 0.7, and we believe it might remain there for quite some time. And reasons for that is it doesn't have a very diversified product mix. I mean to say that the number of products available today, increased financialization. People demand different kind of products which LIC doesn't offer. Even if you look at the distribution channel, which is a key metrics to see how premiums are collected. So it relies heavily on agency, that is a agent structure, which is not very cost effective, and it has the lowest ticket size, more of retail, kind of premiums coming in, which doesn't augur well. So not that these factors for LIC won't change, and not that we'll always remain hold on the stock, but right now the private spaces are offering better, risk-adjusted returns as far as the investment is concerned. So LIC is gold for us. Not that we don't have upside over here. We are seeing an upside in LIC to 1083, which is not very significant. It's that's the target we have for LIC. So all in all, we are optimistic on this space. It is quite possible, Nandita, that there might be couple of quarters where margins might stay at lower level or slightly correct, but it is in price. And as I always say in most of my interactions, that market will either give you a good story or will give you good valuation. And it seems like insurance space is right now available at, if not very attractive, then inexpensive valuation, and one should see it from a long-term perspective in its portfolio.
All right, that's the view on the insurance space. The tide may be turning, valuation attraction is there, and these are some of the stocks that Sid highlighted among his top picks. But with that, Siddarth, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. It's always a pleasure interacting with you, and I look forward to touch base with you and talk about other sectors, other stocks as well. But before I let you go, wishing you a very happy Diwali and a very prosperous year ahead.
I wish you the same, and all your team and viewers happy Diwali.
Thanks a lot. With that, of course, we've come to the end of this edition of Opening Bell. Just taking a look at the markets before I say goodbye. We've slipped below that 24,350 mark as well. 100-point cut on the Sensex. We've given up 80,000. And the Nifty Bank Index as well is now very close to that crucial support of 51,000. Of course, the big drag on the Nifty Bank Index, no points for guessing. It's IndusInd Bank. That stock is now down 16%. So, a 16% plunge on the back of weak earnings, margin pressure, asset quality deterioration, not boding well. So, the outperformance that we've seen on the Nifty Bank Index, in a weak market over the last few weeks, has kind of fizzled out at the current juncture. But let's see whether or not, we manage to come off this hiccup and, resume the up move on the Nifty Bank Index, because that was the only index that was actually providing support to Nifty in a weak market. But with that completely timed out, thanks a lot for tuning in to Opening Bell. Of course, look forward to seeing you on Closing Bell as well. But till then, have a great time and stay tuned to Money Control for all your other news and updates.